Good morning and welcome to Morning Markets with True Potential. Checking up on news and developments over the past 24 hours. If you look at the markets continue their positive momentum yesterday. European stocks were up around 1% on the day. If you focus on the US markets, broad US equities were up 0.6%, benefiting from strong earnings from DuPont, the big chemical company. Though Disney reported some disappointing numbers yesterday on back of operating losses in certain parts of their business. There were some positives in those earnings results from Disney yesterday. We saw subscriber growth continue to be healthy overall in the quarter. If you focus outside those two regions, Chinese equities were also soft yesterday, and they are soft this morning as well after having a strong start to the week. What has been driving that weakness is rising COVID cases. We saw in China reporting largest rise in the COVID cases since April. So that has been feeding into the market sentiment overall. UK markets, equity markets were largely flat on the day. Focusing on outside equities, bond yields fell across the board. Gilt yields and also US Treasuries fell across the board. That fed into the weakness in dollar overall. So we saw dollar continue to give back the gains that it has contained over the last quarter and or year to date overall. Oil market was also weak on back of better inventory data from the US and also fear of Chinese slowdown on rising COVID cases. Though we continue to believe that the oil market will continue to have upward pressure given the supply constraints and low inventories overall. And if Chinese demand has to come back on relaxation of COVID restrictions or COVID lockdowns being eased, that could also feed into high demand. So overall oil prices could continue to have upward pressure in near term. If focusing on the economic data front, this morning we saw UK retail sales data coming out of October, with retail sales in October grew 1.4%. Though that was largely down to the price increase rather than volume. Volumes were weak across the board. The only bright spot in volume terms were furniture, where furniture demand grew in volume terms as well. This confirms what we have been speaking to you, and Bank of England also hinted that continued slowdown in the UK economy is well entrenched. If we shift focus on other big news, which was US midterm election, we saw the US elections. The results overall would take a few days to come through, but it's likely that Republicans will take control of both the House and the Senate. What it means for the market? Historically, the gridlock in Washington has been good for stock market, and it also brings some fiscal constraint. Fiscal policies may not be passed through, which gives overall liquidity conditions in the US market a bit tighter, giving some room for the Federal Reserves to ease if they have to, given the liquidity conditions have been will remain tight on restrained fiscal spending overall. But quickly, market will again turn their focus on real data. Real data tomorrow is US inflation print, which is out midday tomorrow UK time. The expectations are of some softness, but again, we'll expect around 8% year-on-year rise. But let's see how it comes through. This morning we saw inflation coming out in Chinese inflation, also softening to 2.1% in October from 2.8% in September. What's driving that softness in Chinese inflation is again the softness in final demand. Consumers have been restraining from spending. The overall lockdowns have also eased the price pressure all. Let's see how markets react to both the US inflation print and Chinese inflation print this morning. We'll keep you posted on how they come. And for now, we'll leave it there. And thank you very much for watching Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.